Okay, hello guys. I believe you can hear me. All right. So, first of all, we need to. I told you that you should learn market structure, right? So, we are going to be doing something spectacular. Okay. So, I'm going to be using Trading View. Now, I told you that anything that has a chart, this method I'm about to teach you works 100%. Anything that has a chart, you can use it on crypto, you can use it on stocks, you can use it on even what do they call it, DeFi tokens. Those one that just came out that is not well known, you can use it and analyze the market properly, and you don't even need to take time to do that. Okay, so the first thing you need to do is, let's assume I want to analyze a USD JPY. I think I've already analyzed. I want to analyze the one I've not analyzed. Let's see. Okay, Euro JPY. Now I will need you to install two things. Number one, I want you to install Liquidity Swings by Lux Algo. Liquidity Swings by Lux Algo. Okay. So if you have done that, you will see something like what you are seeing on my screen presently, like this. All these things you are seeing are where liquidity are residing. All these places are where liquidity are residing, meaning the market is going to go and grab this liquidity. If you come down to this place, you will see 500 here. Liquidity has been grabbed here. The remaining liquidity here is just 580. But if you go up, you are going to see liquidity of 8,000 plus. I can't really see it, but then now indirectly I'm aiming that market is going to come here, right? So what I'm going to do is that we are going to buy from somewhere and take profit at that top. Okay, so now if you pay close attention to me, your analysis may be 90% correct all the time. See, the secret to trading, becoming a profitable trader, is knowing the things that few people know. There's no gainsaying, there's no secret, nothing. When I've paid people different amounts. Paid one guy 120,000 to give me signal. It was all losses, all true. Presently, as I'm speaking now, I'm funded on my $15,000 account. My $25,000 account is in phase 2, ready to be funded. Okay, so these are the things I use. I don't struggle anymore. All I just do is I want to know the directional bias. Okay, so we are going to start on the higher time frame. Now, what I want you to do on the higher time frame is simple. You are not to do anything. You just want to know what is happening on the week, what's happening on the day. That's all. Meaning that the week and day must align. If the week is bullish, the day must be bullish. If the week is bearish, the day must be bearish. If the week is bullish and the day is bearish, we know that it's going to become bullish, because the higher the time frame, the higher the overall expectation. That's market will always drift towards the time frame, the higher time frame, right? So what we are going to do is to make sure that we see a kind of synthesis between the weekly and daily time frame. If you see that, you can now analyze the market. You don't need to take all trade, right? So if there is any difference in weekly and daily, I would advise either you stay away or you use this liquidity to see where liquidity resides and set your entry. The bad thing is, the sad thing here is that you could actually do it, right? But as in, you could actually take a trade, but it will take longer for that trade to execute. So if you are not the patient type, you may want to jump into the market. Okay, so but if you are the patient type, you are going to reap or make a lot of money. Okay, you risk more, you make lots, like 11-hour risk to reward, 38-hour risk to reward. Let me show you one. This is a 1 to 17 risk to reward. 1 to 17 risk to reward. But then it may take a week, it may take days. If you are lucky, maybe there's news, it may take a day, 2 days, 3 days, it may take a week. But then I have another one that's 28 risk to reward. So if you're able to do what I'm explaining to you, you'll be able to understand how the market moves, and you'll be able to catch the market when other people are not catching. You may not even be there. For example, now immediately the market open on Monday, I'm setting all this, I'm forgetting about them. I'll just set maybe 0.5 of my account and leave it to run, right? Good. So now let's go to analyzing. Okay, so I'm going to be analyzing Euro JPY. Now the first thing I want you to do is go to a weekly time frame. Now when we're on a weekly time frame, you can see for a fact that we are forming higher highs, higher low, higher high, higher low, higher low, right? So indirectly, for you to really know what, in case you don't know anything about market structure, take your trend line and look for the present market price action. Take a look at the present price action and look for two spots and connect them. You can see this is bullish, right? You can see this is bullish here. So all you just need to do is just connect them, then you can know that price is going upwards, right? So what we are going to do is that since price is bullish on a weekly time frame, we are going to be looking for a point where we are going to be buying and follow the trend upwards. Okay, so we know price is bullish on the weekly time frame. Then let's go to daily time frame. Now on the daily time frame as well, price is bullish. So this is a key that what we are going to be looking for is buys. But this time around, we are going to be buying from the best discount rate, as in the most cheapest point. For example, a lot of people will decide, okay, let me, since it's buy that I'm looking for, let me sell down to the point where I'm going to buy. It's risky, but then if you know how to manage your capital properly, you'll be able to know. If you know how to manage your capital properly, you can take that risk. But then it's better for you to follow the line which is bullish, right? So you can just set your entry and wait. All right, now on the daily time frame, if we come down a bit, you are going to see that our liquidity swing is giving us an idea where liquidity resides. Okay, it's giving us an idea where liquidity resides. A minute. All right, sorry guys for the break in transmission. I quickly had to take care of something. Okay, all right, so as I was saying, after you have this a 4-hour chart, I mark out my liquidity on the 4-hour chart, because the higher the time frame, the better for you. Remember, we are looking for a buy, right? Don't forget that we are looking for a buy based on what we have analyzed in the past. Weekly is bullish, daily is bullish. So on a 4-hour time frame, we are looking for a buy. Even if you want to sell, it will have to be a short time sale, right? Okay. Now, I told you before now that the market is being driven towards liquidity. Now, one thing you should understand is that the market is always driven towards liquidity. It's always going to grab liquidity before making any move downwards or making any move upwards. Okay. Now, it is very, very important for you to understand that the only valid point of a liquidity is when the liquidity has a fair value gap above it. If it does not have a fair value gap above it, I'm not going to take it. And if it has two, you have two liquidity just close to each other, maybe not too close, but then they're just above each other, and both of them have fair value gap, I'm not going to take the first one. I will rather take the one that is above, not close to the price action, so that I will not be stopped out. Okay, so that I will not be stopped out. Because if you decide to take the liquidity below, this may extend your stop loss to a ridiculous amount that it will take or eat inside of profit, right? So what we are going to do first is, now we have marked the liquidity above, I want to mark the liquidity below. Remember, I told you liquidity are those long lines where price just rejected. What it simply means that there are orders down here that still need to be cleared. There are orders down here that need to be cleared. You remember, we are looking for a buy, right? So we are looking for the best place we can buy from. The best area we can buy from. Okay, I'm going to mark this one as well. Mark two more. Mark two more. All right, so now pay close attention. This is where price is at this present particular point in time. Okay, now pay close attention. This first one is for me is invalid. I'm not going to take any trade in this box here. Even if price goes here and come down, I'm not going to take trade there. These are, I believe these are inducement points where something will happen like this before coming down. Okay, so I'm not going to take any trade here. All I'm going to do is I'm going to wait for the last liquidity to be broken before I take any trade. Now what I usually do is, now that I've marked the highest liquidity, which is this point here, I'm going to go to a lower time frame to go and look for an order block where I'm going to be selling from. Remember, I'm meant to buy, but then market will still have to come down, fill all the holes. What I mean by holes, I'm talking of all these imbalances that are here. Market will fill them up. Market will fill them up before moving upward. Okay, it will fill them up before moving upward. So now let's assume I want to draw. Let me draw out all the value gap I'm seeing. Okay, I'm just making a mental note of them. Just making a mental note of them. If there is any news, there is every guarantee that market will get to this place, price will get there and turn upwards. This is the best place I can buy this market. This is the best spot I can buy this market from. Okay, so this time around I'm going to be looking for where I can sell this market from. Now normally you are supposed to turn to your left. Let me go back to 1 week so that we can see our chart compact. You are supposed to turn to your left here, but because I'm not using a computer, it will be a little bit difficult. Okay, so what I'm doing now is I want to draw my fair value gap on a higher time frame. Then I can go back to a lower time frame and readjust. What you are seeing here is more than 50 pips. This small line you saw here just now, it's more than 50 pips, but it gives me an accurate idea of where price is likely to get to before the turnaround downwards. Okay, before the turnaround downwards. All right, now that we have that in place, okay, now that we have that in place, I'm looking at it that price will need to get to this point first before we see any move down. But in case we start seeing the move down, meaning it breaks this trend line, I will start seeing the move down. Price is going to get to this place where I marked on the lower time frame. Marked it on the lower time frame. That's on the 4-hour time frame. You see that it's small, so you may not likely see it. Okay, so price may get here first before going up, or start from here and come down here to clear all the imbalances that are still remaining. Okay, that are still remaining. So now we are on a 4-hour time. Now we are on a 4-hour time frame. We already have an idea of what we are looking for. We already have an idea of what we are looking for. If we are going to be buying, we are going to be buying from here. That's the best place to buy. It could take days, it could take weeks. If you are the kind of person who is anxious to just enter the market, there's every guarantee you may lose your cash. Okay, so I usually set 20 pips or 25 pips as my stop loss. 25 pips as my stop loss. That's if I'm not going to be here. Then I'm going to target the highest liquidity point here. So indirectly, I'm waiting for price to come down here, react, and move upward. What you are seeing here is a risk to reward of 39.1. So let's assume you have a $5,000 account and you are risking 1%. 1% of $5,000 is about 50 times 39. So you are using $50 to get 1,950. $50 to get 1,950, which is a good price if you are willing to be patient enough to wait for price to react there. Now also, I'm not going to sell from here because we see that on a higher time frame is buy, on a 1 day time frame is also buy. I'm not going to sell here because if I sell here, it does not really make sense. Where the best place to sell from will be from this top here. But then I already have idea of where the liquidity are residing. So in case I see market take out this liquidity and start reversing in a lower time frame, I can quickly grab maybe 30 pips, 40 pips, 50 pips like that. But then it should be a short term selling. Okay? But when price get to this point where you are seeing it's a buy, it's a guaranteed buy. It's a guaranteed buy. And when it gets to that point you are seeing above, it's a guaranteed sell as well. Because if you first go to that place, it's going to take the liquidity above and come down and take the liquidity below before moving in the initial direction. So if you understand this, it will be easier for you to know how to trade this market easily. So always remember, look for the higher time frame and then make sure you look for a order block or a fair value gap that's above the liquidity pool. A fair value gap must be above this liquidity. And secondly, as I told you, if you go to a 1 hour time frame, all those liquidity area are marked. You can equally see that there is a fair value gap below here. Here does not have a fair value gap. Fair value gap is 3 candles and the space between 3 of them. These 3 candles are joined, so there's no space here. So this one is invalid for me. I'm not going to take it. Then I'm going to go to the next one, which is this one I marked here. Liquidity is here. Is there any fair value gap close? Yes, there is. So I'm going to take my drawing tool and draw my fair value gap. This is the first one. Okay. This is the second one. A lot of people enter through the first one, but from the experience I've been gathering so far, I've seen that the second fair value gap is always being taken. I actually retrace at this particular fair value gap and retrace upward, but then it's just short term. It retraces and come back and come to take this next fair value gap before moving upward finally. Okay. So, but then you have to take patience. You have to be patient with it. You don't even need to say you want to stick with only one pair of currency, right? You can use this as multiple currency as possible. For example, now all these ones you have seen, I've analyzed each and every one of them. Okay, I've analyzed each and every one of them. I'm only just waiting for Monday to come. I set my entries and hopefully that the market will come pick me up whichever way it is. Like for example, now I've set a sell here, a buy here in case market retreats here before going up, and then I've set a sell from above as well in case market goes up. So whichever way it is, I'm making profit both sides, right? So that is that. So just know where the liquidity pool is residing and then look for a fair value gap below the liquidity pool if you are buying or above the liquidity pool if you are selling. Then set your entry 20 pips maximum stop loss. If anything happens, just ignore it. Okay, anything can happen, but then it will give you a high chance or a high winning rate as long as there's a fair value gap above the liquidity pool. Okay, so that is that, and that's how simple this particular thing is. I wish you guys well.